Welcome boys to a quick recap of the trade that I took today on AUD USD. This trade passed me a phase 1 10k and made me 5% across quite a few different accounts. This was both a Mech trade and a hybrid trade. They had the same bias, both of them were bullish for this trade, but we're going to go through the Mech bias for this one because it's a lot easier to understand. And we're going to break down everything from the bias to the entry to the rules that we followed taking this trade and exactly how you could have taken this trade as well. The first thing to establish is our bias. Where do we think price is going to go? Do we think it's going to continue moving up or do we think it's going to start moving down? Now the way that we do this is we hop onto the 4-hour time frame right here. We install the fractals indicator, this one here by Rachel T, and we look for the most recent break of structure to a fractal. So we look for the most recent fractal after we've drawn the session open. Now this was a New York session trade, so I set this at, you can see it right here, at 1 o'clock UK time for New York open. Now we hopped onto the 4-hour time frame. Most recent fractal was here. Was there a break of structure? So a candle closed below this? No, there wasn't. We go to the next one. No, there wasn't. We go to this one. We draw a little line across. Yes, there was. This wick didn't count. This candle didn't count because it didn't close above this high, but this candle closed above it. So we were bullish for the day. So that meant coming into the current session, which for us was a New York session trade, we need to find the lowest point in London session. So we can draw out the start of London session, which is 8 o'clock UK time right here. And the lowest point I can just see right here is this point, and I'm going to draw this across to find our level and wait for that to get swept. As soon as you've marked out the lowest point in London session, we now just need to wait until we get a sweep. So you're going to just let price play and just see what happens. We're going to wait until we get a sweep of this level. And you can see right here we get a sweep. As soon as it's tapped this line, even if it's level, if it's tapped it and the alert goes off, that is a valid sweep. Now we need to find the fake out, which is a fake move in the direction of our bias, followed by a move back down to stop out all of the people that got in too early. Now the way that we do this is by using the fib tool. So we draw the fib tool from the highest point in London session all the way down to the first bullish candle that forms. So we need to wait for a bullish candle to form. And you can see right here, the next candle was a bullish candle. So we draw this down here, and this gives us a little fake out zone. Now you can either draw a box or a little line or whatever you want to do. We'll draw a box just to make it clear. This is our fake out zone from the blue line all the way down to the bottom of the fib, which is right here. Now, as soon as we get a tap back into this fake out zone, this is a valid fake out. So what we need right here is we need price to come back into this zone to stop out all the people that got in too early. There'll be people that got in right here, stop loss just under here or whatever. We need them to come in and get stopped out right there. So now we're just going to wait. We're going to play price through and wait until we get a tap into this zone. Not just yet. We're going to wait, and this candle right here taps us in. So this bearish candle comes down and taps us into there, so that is fully valid. Now we're waiting for a break of structure, which is a candle close above a high on the 5-minute time frame. So I'm going to look for the most recent break of structure, which is this right here, and I'm going to wait for this candle to close through it. This candle didn't count because it's level. We need to wait for an actual close above it. So I'm just going to wait, and this candle closed above the most recent fractal, which is this one right here. Now, as soon as we've got that, we can move on to the actual entry criteria, which is once again using the fib tool. This is a very, very important tool right here. We're going to draw it from the lowest point all the way up to the highest point, and this is going to give us our entry. We can get rid of the fib, we can get rid of this level sweep right here. Now what we're looking for is price to retrace into this kind of Goldilocks area between the 0.5 and the 0.618. The reason we need this is if we just entered here or just entered off of the breaker structure, it wouldn't give us a very good risk to reward. If we, for example, entered all the way, I don't know, maybe up here, like halfway through, and we put our stop all the way down here under the low, it's not a very good risk to reward. So now we need a bit of a retrace to give us that better risk to reward. So now we can put it on the 0.618. This is the kind of Goldilocks zone. Put the stop loss at the 1.025. Once again, the fib makes this super, super simple, and target a fixed 3 risk to reward. So this is what we're waiting for right here. Now, if the fib is extended like this, we just continue to move it up and we just adjust our limit order on the 0.618 and adjust our stop loss accordingly, and that's completely fine. So now we're going to wait until we get tapped in. Now you can see the fib range extended a little bit, and this was our entry on the 0.618. Stop loss just under here and targeting a fixed 3 risk to reward. Now we got tapped in right here at 245. And with this model, we set and forget. We don't move to break even. We don't pull out at 8 o'clock or anything like that. We just completely leave it. Unless it's a Friday, then we pull out at 8 o'clock for the weekend. But this was taken on Thursday, so we're just going to wait. I'm just going to let price play all the way through. Now, right here is where a lot of people would have gone break even. A lot of people, once it's maybe taken out this internal high, or maybe once it's hit 2R or something like that, a lot of people would have moved their stop loss to break even all the way up here. And this is what happens when you do that a lot of the time. Price will come back down and it will stop you out at break even when we get the tap all the way through. So you can see it messes about quite a lot here, and it comes back down to the break even level. Now, this is exactly what we've seen in the backtesting, and this is what happens a lot, and this is exactly why we don't move to break even, because you can see it came down, it tapped out at break even at 9:45, and you would have been out. You would have made 0R unless you maybe took some partials, but we don't do that. So this is exactly why you set and forget. We just held this all the way through, and I'll go on the 1 hour time frame to speed run this a little bit, and you can see it came down quite a lot towards your stop loss, and you'd be getting a little bit nervous right here. But what happens? It rips all the way up to there. So this is exactly what happened on this trade, and this is how I passed a phase 1 10K, is I set and forget. I just left it. It came down here. You guys might have been exiting early or moving to break even or any of this emotional shit. If you just left it, and you can see price just continued to run. I know a few guys in the Discord caught some fucking ridiculous returns all the way up here. That went to like, was that like 6R, yeah, 6.4R or something ridiculous like that. I personally just took a take profit of 3 because that's all I needed to pass this account. And I made 5% on quite a few other accounts. But this is a very typical tap and barrel model. This was using the Mech bias, but you could have also used the hybrid bias, which has a slightly higher win rate. But if you guys want to know how we do this, if you comment PDF, I will send across a free PDF that has basically everything I've explained in here with a little bit more detail. And you can join the Discord for free, and we can show you everything we do in there. It helped me quite a lot when I was learning the model, and I highly recommend it for anyone that is relatively new to day trading. Now, that was pretty much it for this one. Very successful trade on this one, and I will see you guys in the next one.